What's up, guys? We've got a lot to cover today. Not a ton of time, but my goal for today's video is to kind of, you know, bring to light some misconceptions or I guess myths about dividend stock investing. There's a lot of naysayers, but this method can work really well for you. It can be a great way to compound wealth and create a growing income stream over time. But, there's going to be myths, rumors. So we're going to talk about a few of them, and I'm just going to offer, I guess, my rebuttal to that. So I've done a little research. I've pulled up a few sites. This first one's from Experian. Experian: Three Reasons to Avoid Dividend Stocks by Marianne Haynes. All right, let's get into this. The reason number one she gives is dividend payments aren't guaranteed. They can fluctuate. Um, I don't even know if this is a super valid point, and I don't want to spend too much time on this, but yes, it is true. Dividend payments are not guaranteed. They're not even declared, by the company paying them until, whatever, a month, 2 months in advance of the payment. But with that being said, like, what type of investment is guaranteed? I guess with the exception of US Treasury bonds. I mean, investing in growth stocks, nothing in this game is guaranteed. Any sort of investing is going to take time to kind of develop your edge and kind of develop a profitable strategy that works for you. So let's talk about, things we can do, steps we can take to further ensure that, we will get our dividend payments. And it's a couple simple things. We won't use AT&T as an example. We can use Pepsi as an example, one I don't own but I've referenced before. So I'll jump over here to Seeking Alpha, go to the dividends tab. The first way we can kind of, get some assurance that a dividend payment is going to come is very simple. We're going to look at the track record, guys. Not to say that some long track record guarantees to continue in the future, but if a company has demonstrated that they've been able to grow and pay their dividend for, X amount of years, to me, that does give me some reassurance in the fact that they'll continue to do so in the future. No, it is not guaranteed that Pepsi will pay, a dividend payment in a year from now. However, we can take steps and we can kind of, work with our own personal risk tolerance by looking at the dividend growth rate as well as that sustainability of the dividend. Okay. That's the payout ratio. Okay. Right here on this tab, it's going to give us the earnings payout ratio. However, there is a metric I personally like to use better, and that's going to be the free cash flow payout ratio. So I'll show you guys where to find that. Dividend safety, we can see that, on a future 1 year basis, Pepsi is only paying out 53% of their free cash flow to shareholders. Okay, so with these two things in mind, Pepsi has that long track record of dividend growth, and they're only paying out roughly half of their free cash flow to dividend shareholders. So this dividend is not guaranteed, but for purposes of my own personal risk tolerance in my own personal journey, if I see numbers and metrics like this, I would consider this to be a safe dividend. We would dive deeper into other metrics, but let's not get off topic in this video. Let's look at her next point here, which I think is one of the grossest misconceptions in this game, and I see it all the time. People are, arguing about dividend investing not working because of the tax liability of it. And, because having to pay taxes obviously can slow down compounding. But let's dig into this, okay? All of the companies I'll back up. Her second myth is dividend income is taxable. Okay, true. If you're building your dividend portfolio in a individual taxable account, you are going to be subject to, income tax on those dividends. If you're holding a company that pays a qualified dividend, that's typically going to be a fixed rate at 15%. And if you're holding a company that pays a non-qualified dividend, that's typically going to fall, as ordinary income. So it's going to fall into whatever tax bracket you fall into for that year. So 15% roughly, and then, roughly whatever you pay in taxes. Quick thing to understand, guys. Dividend income is taxable. But I feel people have taken this point and kind of used it as, okay, so, just invest in growth stocks. You don't want a company to pay dividends because then that's going to trigger a taxable event year after year. Guys, I get that. I think that's a small price to pay. But I think people seem to forget that, investing in growth stocks, in order to realize any sort of gains or wealth, it's also going to trigger a taxable event. Again, here, if we assume for the purposes of this video, we're trading in an individual account, guys, you're going to be triggering taxable events, regardless of what type of investing method you're using. So, we'll look at long-term capital gains tax. Okay, so the rate jumps to 15% on capital gains on long term, as long as basically people are working full time. So that's very similar to this qualified dividends rate. And in order to realize any sort of wealth, to have any sort of money or cash flow, same thing here. You're going to trigger that taxable event. And, I went ahead and gave them the benefit of the doubt here by going with long term, which is essentially a holding period of like 366 days, roughly. If you're trading more short term, let's see. Okay, up to 11,000. Let's see something comparable. What am I doing here? 24% roughly. Yeah, roughly 24% on short-term capital gains, which is that's much higher than that, qualified income we're going to be receiving from, dividend stocks and dividend payments. There's one other myth that this lady gave, and then, we'll dig into one other source. But she said interest rates can affect dividend stocks. And I think this is a great point, especially now. I feel this is more relevant than ever. I think in 2023, we saw a lot of these value, long-term dividend payers. We could think of a quick example. We can use like not J&J. We could use Coke. In 2023, these kind of seen as solid dividend stocks, they were underperforming the market. So, I think part of that was a lot of investors were rotating into kind of risk-free securities, trying to get higher rates and rotating out of their dividend stocks. Well, I guess my rebuttal for that is, as a dividend growth investor, that to me, that's too much churn. By churn, I mean, I don't want to constantly be turning over my portfolio, selling out of positions because of, macroeconomic things like interest rates being high. I need to get into CDs, treasury bills, whatever. I do understand that interest rates can affect dividend stocks, and I've pulled up, somewhat of a helpful graph, if this helps at all. We can see here the Fed funds rate versus the S&P 500. We'll go back to March 2022 is when the Fed funds rate really started to take off. We do see a correlation. We see a correction in the S&P 500. Okay, guys, I get that. For me personally, if rates are high and it's negatively hitting stocks and it's negatively hitting the market, I'm not actively trying to manage and try to, time things perfectly to where I'm selling out of, solid dividend payers. if I have positions that are down that I still view as a great opportunity, guess what I'm doing when rates are high and my stocks might be down? I'm buying more. Okay, so this isn't even, interest rates can affect dividend stocks. I don't even see that as a reason to avoid dividend stocks. I read this and I think, okay, so in different interest rate environments, there might be different opportunities. There might be, different types of stocks on sale. And I'm not trying to lecture. I'll have to drop a part 2 to this video at some point, with a little more structure. But today I think we just needed to get a few things off the chest. This one's more of a misconception. It's not really a reason to avoid, but I am personally tired of kind of this notion that dividend stocks are always boring. Okay. Or I've heard that's an old man stock. Dividends. Why are you so invested in dividend stocks? You're 22 years old. You should be buying Nvidia at all-time highs. I mean, Nvidia does pay a dividend. You should be more focused on, Tesla, Amazon, these guys that are going to be able to grow so much in the future. It gets to me sometimes. Dividend stocks are not always boring. Matter of fact, I think this can be one of the most fun and rewarding games, seeing your income, increase, your passive income increase and compound, reinvesting when you can. We mentioned taxes earlier. If you're able to pay your dividend income tax out of pocket, then that's going to help you long-term compounding, obviously. But, we're getting a little sidetracked. Let's continue. So dividend stocks are always boring, guys. That's just simply not true. My biggest holding in my dividend growth portfolio right now is actually Apple, which you guys will know if you've viewed kind of my portfolio reviews that I post month to month. Currently, I'm not as interested in this one just because it's been outperforming for the past roughly 18 months and the yield has gotten driven down therefore. However, I mean, a company like Apple is only paying out, roughly 13.5% of their free cash flow on a future basis, guys. I mean, this is a company that has a lot of other things they can do, with that free cash flow. They can expand into new avenues. They can develop new products, as we've seen with, all their recent innovations, the AirPods, whatever. The AirPod Pros, I don't know how I feel about them. There's a ton of companies that pay dividends and reward shareholders in this way that are not boring companies, that are not they have nothing else to do, so they pay a dividend. So, let's move on with this a little bit. Sorry, guys, I had to pause real fast. I was looking for my next source for the video. Okay, so I see this floating around sometimes, and I don't want to call anyone out. This is not any diss or anything, but there is a channel on YouTube called Everything Money, and I do appreciate, how process oriented those guys are. They always talk about in their videos, we teach a process, whatever they say. However, I kind of feel like they often pitch to their subscribers that a company paying a dividend is like somehow pointless or it should be the last option. Guys, let's take a look at 3 things companies can do, with their free cash flow, right? So they have 3 options essentially, right? They can reinvest the money to help grow the business. This encompasses, a few different things: research and development, product development, new target segments, even acquisitions of other companies. All right, so they can reinvest the money into the business, into growing the business. They can buy back some of their shares on the stock market. All right, this is known as share buybacks. A company that, has some sort of plan in place to decrease their shares outstanding. Typically, that's a sign that that company wants to, reward shareholders by, what's the opposite of diluting them? I guess making them a bigger percentage owner of the company. And then lastly, they can distribute earnings as a shareholder to dividends, guys. Today, we're kind of focused on this last point and what are some of the benefits that come from, okay, they're distributing earnings to shareholders in the form of dividends. Well, let's get into it. So if a company pays dividends and, they've kind of made this commitment to shareholders to reward them in that way, that's going to do a few things. Obviously at first glance, it's like, oh, here's some cash. Great. It's a great way to reward shareholders. Well, it also incentivizes shareholders to stay invested in that company, right? Because if you get, a dividend paycheck one quarter, stock appreciates, now all of a sudden you don't just want to sell and take those gains because you are invested in that company, and theoretically you can continue to collect these dividend payments, right? That's a big incentive for long-term shareholders, okay? And even some portfolio managers, they have like sections of their portfolio that are kind of designed to be their dividend exposure, their income exposure. So if a firm or an individual doesn't want to sell out of a stock, what does that do to the share price, right, guys? It lowers volatility. Okay, does that make sense? So simply by paying out, some of a company's free cash flow to shareholders, a company can lower volatility of their share price, as well as they can not ensure, but they can kind of suggest that their stock will outperform, in down markets. And off the top of my head, let's try to get some example of this. Okay, so we were talking about how if a company pays a dividend, it can offer some downside protection. And I can sit here, and ramble about it, but I think it's better to show an example. And I had to pause the video because I was trying to think of an example and I got a little flustered and, ended up pulling up an example that ended up not being the best example. So we're back with a better example. I should probably write out examples before I film these videos, but whatever. Here we have Coke. We've charted the price return from, the beginning of 2021. You'll see right here, January, 26th, 2021, all the way to present day. That's a 3-year time frame. And, let's focus on kind of this first year, this first third, which is going to be 2021. What do we see between this orange line, which is Coke stock, and this blue line, which is the S&P 500? We see similar performance, right? I think it's safe to say that, Coke and the S&P 500 were pretty much positively correlated in 2021. They tracked very similar, and they ended the year, a few percentage points off, right? Fast forward now, okay, 2022, a year when the market, kind of fell into a bear market. The market declined. And we're talking about how sometimes dividend stocks can offer kind of this downside buffer or downside protection. Okay, why is that? So we see in 2022, as this blue line being the S&P 500, falls into essentially an ugly downtrend that lasted pretty much exactly 1 year, from basically the start of 2022 to the start of 2023. The S&P 500 was in pretty much just a downtrend. I think that's safe to say. What do we see with Coke in 2022? After they kind of were at the same point after 2021, Coke is able to hold up and vastly outperform the market in that year, guys. Do we see that? And why is that? Okay. Part of that is dividend investors that are bought into this company, that are committed to collecting that income and not selling, are not as likely to sell Coke. I mean, that's pretty easy to understand, but there's something else I want you to consider here too. When Coca-Cola dips, right? Let's say it dips with the market, dividend investors who may be interested in adding Coke or already own Coke are going to see that dividend yield. What? They're going to see it start to creep up. as the stock falls, what happens to the dividend yield? It increases, right? That's basic math. So as they see this dividend yield creep up in, a solid dividend payer like Coke, now all of a sudden they're going to come in, longer term investors are going to come in and they're going to add to their position, or they're going to start a new position. And that kind of, that increasing dividend yield creates buying pressure. Do we understand that? So simply by paying a dividend that steadily increases over time and having that track record, companies are able to protect themselves from sort of this free fall that we saw in the market in 2022. I hope you guys are able to, wrap your head around this point. I would call it kind of like a dividend price floor, or just buying pressure that comes into play. And it's not often talked about. Everyone talks about, dividend stocks have less volatility. Well, I think if we kind of start to wrap our head around, okay, what is the why? Why are dividend stocks, why are these great value names, trusted names, why are they able to outperform, in bear markets as we saw in 2022? Okay. So without getting too wrapped up in this video, I think this is a good length for, kind of the first video, or maybe second, where I'm kind of addressing misconceptions or naysayers. I hope you guys enjoyed this. If you did, I post content on Mondays and Thursdays, anywhere from stock analyses to conceptual stuff like this, reaction videos, and portfolio reviews, guys. We got it all things dividend growth investing on this channel, guys. I'm super happy with the growth we've seen this year. Feel free to subscribe, and everyone have a great rest of your day. Let's build wealth.